you'll see it in a minute here, as the market really picks up, these bars tend to get shorter, and as the trading gets a little more difficult or creates less follow-through in the market, then we notice that those bars get a little longer. But again, it's red, white, and blue, as in 10, 20, 30 seconds. So we can see this bar that was red populated less, it's 10 seconds or less, so 10, 20, 30. So red, white, and blue tells you it's taking 10, 20, 30 seconds for these bars to populate. So we have time to see the trade populate, look at the trade, make a decision, and get in the trade and execute our money management. But we're looking to trade with that trend, so we're not necessarily looking to take this long. We might be looking to take it short here again, because this would be considered a counter trend, rather with the trend trade on a crossover. Keep in mind with the MCD we have two basic setups. One is called pullbacks, the other one is called crossovers. The crossovers are where those outer dots just cave in on themselves and fold over, and we represented that with a black line crossing over the blue line. Right? The problem is sometimes, as we see with the market, we like the idea of the trade pulling out and stretching out and spreading and then pulling back and then pulling. So we're not necessarily, although you can, and people do, take crossovers with the trend, and some people even take crossovers counter trend. And of course we use these supporting charts here to help us isolate. But the number one trade we want to teach, and we know that if we keep it simple for the traders, we know everybody wants to make that 300 to 600 per day, or 1600 per day, or 2600 per day. And that has to do, of course, with the number of trades you have in relation to perhaps the number of contracts or the leverage you want to put up. But we know if you can't make 300 to 600 a day, you're not going to get close to those other totals we spoke of. So we need to get you consistent by finding good triggers with little or no drawdown that have follow-through. So here we see we don't necessarily look for that, although some people might take this short. It does come down here a little bit. And the point is not to measure every move here. The point of the video here is to help you understand how the MCD works and why this MCD indicator is good as any indicator you'll ever see. Because once you understand math and science of how to measure price action, there is no better indicator. We're getting in these trades quicker than anybody's indicator in the market, and that includes anybody in the market. Does that mean you have to be the first one in the market to make the profit and to get follow-through? Not necessarily. But it's nice to know that we have an indicator that will match anyone's indicator on the market and will get you in the first bar. And that was always the key with trading, is you want to be in sooner so you can make the profit sooner and get out sooner. Here we see, of course, it comes through as a crossover, short, and we'll wait typically for these to spread out. So as we move the chart forward, here we're seeing it spread out, but what's happening? We're not really getting a good, strong spread here. Now, in this particular market here, we really want to see separation. You can see here how this crossover was actually separating, where you get some good separation here. Black line, blue line, yellow line. You see that? We know when the separation is better that the trading is better, right? So that tells us that, certainly some people can take this trade, and we're not necessarily going to call off each trade here, but this market we're looking at as of this video is the 12th day of January 2010. So as we continue here, again, it comes back up. And here's another pullback, and you can see how this spread really opens up here nice, and you get that full zero line, which shows us a red zero line and a red histogram bar. And what you'll see is usually when you're losing the trade, it'll go back. Remember, red is for short, green is for long, so we don't want to necessarily see green histogram bars when we're trying to take something short. But you can see here another trend trade with the trend. When I say with the trend, that means with this trend line, and that would be considered a crossover. But we're looking for pullbacks. We're looking for trades to actually stretch out and then pull back. Okay, the reason we look for those is because not because you can't be effective with crossovers, but because with new traders, intermediate, and even experienced traders, we want to just get you in the best market dynamic, and we know the best trades typically will prove themselves. We'll have the trade actually going forward and then pulling back and then continuing. So there's nothing new about trading in any of the rooms we've seen and any of the indicators we study, and we study everyone's indicator, everyone's room in the marketplace, and we know exactly what everyone's doing. We know all the math, we know all the science. So there is no secret where to find these trades. The question is, can you get an indicator, and can you train yourself through your edge, through your money management, through your mental framework, perhaps statistics and market dynamics, and focus and attention span, so you can come in here every day and wait for the best setups and pull out the ticks at will and stay out of trouble at will. So that's the goal of our E-mini Trading Solutions room and, of course, our MCD indicators.